apart from the previously said incomes, the income also includes, or the income from profession or a business also includes the value of any benefit or perquisites. It may be in the way whether it is convertible into money or money's worth or something like that, but arising from the business or the exercise of any profession, any perquisites received or receivable is also going to be treated as income from business or profession. The sum due to or received by a partner, in case of partnership firms, they are also going to be treated as the income from business or profession. Normally we mean to say the profits alone, but then in case of a partnership firm, a partner may be entitled to receive any interest, salary, sometimes bonus, sometimes the commission on the extra attempt that we are going to put on, or the remuneration in any other forms, maybe from the business, from the firm, partnership, maybe giving them, will be deemed to be the income from business or profession. So this income should also be computed or calculated or taken into consideration as income from business or profession. But then, however, very interest, salary, bonus, commission or remuneration, by whatever name it is called, or any part of the thereon, has not been allowed to be deducted under section 440B in the computation of the income from of the firm, or from the income to be taxed. This shall be adjusted to the extent of the amount disallowed. So whatever expenses that is allowed and it is received by the partner, that alone is going to be treated as income from business or profession. And any sum, whether received or receivable in cash or in kind, and under any of the agreements for not carrying out any activity in relation to any business or profession, or for not sharing any know-how, copyright, patent, all intangible assets for that matter, franchising or any other businesses, or commercial rights of similar nature, or information or techniques like to assist in the manufacturing process and things like that. That also is going to be something, if it is received for doing or not doing certain things. So any income that's going to be done or received for doing an activity or not for doing an activity related to the business, that's also going to be treated as income from business or profession. And moreover, any other sums received under the keyman insurance policy, or any sum received by the assessee as an employer under the keyman insurance policy scheme, including the sum allocated by way of a bonus or such policies, will be taxable under the income from business or profession. And the fair market value of the inventory on conversion or treatment as capital goods or capital assets, that is also going to be taken into consideration as part of your income from business. Sum received on account of the capital asset referred under section 35AD, with respect to which the whole of the expenditure on such capital assets has been allowed as deductions, that can also be taken into consideration as your income from business or profession. Section 28 also says there's going to be something called as speculative businesses, the speculation business. And according to the section 28, specifically provides or gives, says that where an assessee carries on speculative businesses, that business of the assessee must be deemed any other business, this business necessary, because section 73 provides that the losses in speculation business, unlike other businesses, cannot be set off against the profits of any other businesses that are speculative in nature. Therefore, the loss on speculative businesses, as it cannot be set off with the profits of any other businesses, that can be set off only with the speculative businesses alone. You need to understand what is a speculative business. Okay. And likewise, the loss in speculative business carried forward to a subsequent year can also be set off only against the profits or gains of any speculative businesses alone in the subsequent years too. So, profits and losses resulting from the speculative transactions must therefore be treated as therefore the profits or losses resulting from speculative transactions must therefore be treated as speculative and distinct from the profits or gains of the businesses or profession from any other businesses. To be very precise, or in a nutshell to say, profits and losses from speculative businesses can be adjusted only with the speculative businesses, and it can be carried forward to the next year again with the speculative businesses alone. It cannot be adjusted with any other businesses or income from profession, as the case may be. So therefore, as we were talking about the speculative businesses and speculative nature of the transaction, what is a speculative transaction? A transaction in which a contract for the purchase or sale of any commodity, including stocks and share, is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity or scrips, is going to be treated as a speculative transaction, where any part of the business of a company consists in the purchase or sale of the share or other companies such as companies shall be deemed to be carrying on speculative businesses to the extent on which the business consists of the purchase and sale of such share. However, this deeming provision does not apply to the following companies. A company whose gross total income consists of mainly income chargeable under the heads of interest on securities, income from house property, capital gain, and income from other sources. A company, the principal business of which is going to be relating to the business of the trading in shares, the business of banking, or the granting of loans and advances to others. So in all these cases, the speculative transactions cannot be eliminated. So this cannot be taken as the deeming provisions does not apply to the aforesaid businesses. So the following forms of transactions shall not be deemed to be speculative transactions, because they are all going to be very risky, but then again there are going to be too much of fluctuations are inevitable. So in that case, the hedging contract in respect of raw materials, you do the you contract on the price of the product, the raw material product, and you try to hedge the lower end of the stock or lower end of the raw material, lower end price of the raw material. Hedging contract is in respect of the stocks and shares, because that stocks and shares prices are going to be fluctuating all the time, and when you're going to go on for the hedging contract in respect of the stocks and shares, that is also shall not be deemed to be speculative in nature. Forward contract on shares or commodities, and trading in derivatives. Any form of trading in derivatives is also not going to be treated as speculative transaction. And trading in commodity derivatives too, not only in share derivatives, interest derivatives, in any other commodity derivatives also. If you are going to making a trade, proper trade, that is also not going to be taken as speculative transactions, because a kind of hedging, a kind of limit on the loss will be definitely being placed on these kinds of transactions, so that's not going to be treated as a speculative transaction at all. So on understanding all these things, we now go on to the computation of profits and gains from the business of profession. So according to section 29, the profits and gains of any business or profession are to be computed in accordance with the provisions of the sections contained, provisions or contained in the sections 30 to 43D, various subsections, sections. So whatever is covered under section 30 to 43D, the loan is going to be taken for computation of profits and gains from business or profession. And it must however be remembered that in addition to the specific allowances and deductions stated in the section 30 to 36 of the Act, further permits allow allowances of items and expenses under the residuary sections of 37(1), which extend the allowances to items of business expenditure not covered by section 30 to 36, where they are allowable according to the accepted commercial practices. So whatever is said within this 30 to 36 plus 37(1) till 43D, all these are going to be taken into consideration for computation of profits and gains from business or profession. Probably this particular slide or this particular diagram will give you a proper understanding on what are all the sections that are going to be taken into consideration for computation of your profits and gains from the business or profession. So it's something like 30 to 36, all those admissible deductions as per 30 to 36 of the Act is going to be taken into consideration. Inadmissible deductions as specified in section 40 are also going to be taken into account. The expenses of payment that not deductible in certain circumstances, special circumstances as specified in section 40A, it's also going to be taken into account. Profit chargeable to tax as per section 41 and the other provisions related to that. The computation are all going to be discussed from now on. I'll go up to 37th section. From 30 to 37th section, a lot of expenses are going to be deductible under allowable deductions under various sections. I'll just brief out on all these expenditures one by one slowly. Now, first one being rents, rates, taxes, repair charges, insurance for building as per the section 30. So it says that all these expenses can be deducted. So section 30 allows deductions in respect of rent, rates, taxes, repair and insurance of building used by the assessee for the purpose of this business or profession alone. Sometimes the building might be used both for private and for business purposes. In that case, the expenditure, some of the expenditures which are pertinent to the business alone should be deducted. With here and there certain exemptions are also going to be available. We will talk about that in detail, where the insurance, the building, insurance on the building, repairs on the building, rates, rents, taxes, all these are going to be related to the building, are dealt with at section 30, where the premises are occupied by the assessee as tenant. If the assessee is a tenant in that particular business, in that particular building, the amount paid into the assessee by the assessee, the assessee has undertaken to bear such expenses in writing, that expenses are allowed to be deducted from business income. Suppose if he is a tenant and if he has agreed to take up these or bear these expenses on his own in writing, then this is all going to be taken as deductions from the regular sources of the business. And sometimes when the occupation of the building or the premises by the assessee being the owner, he himself might be an owner and he might be carrying on the business on his own with his own building. So in that case, where the assessee himself is the owner of the premises and occupies them for his business purposes, no notional rent would be allowed. However, where a firm runs its business in the premises owned by one of the partners, in case of partnership firm, the rent payable to the partner will be an allowable deduction. So if you are doing your business on your own building and collecting rent, the rent is not going to be an allowable expenses. But then if it is owned by a partner and if you are going to charge the rent to the partner, the partner is going to charge the rent on the business, then the business expenditure of rent is going to be a allowable deduction. So depending on the conditions, it will be varying. With respect to repair of the premises, also apart from the rent, this section allows the deduction for with respect to the expenses incurred amounting to repairs of the buildings. In case if the assessee is the owner of the building, or the assessee might be a tenant of the building who is going to undertake the repair, the cost of that repairs and things like that in writing. Even if the assessee occupies the premises otherwise than as a tenant or owner, whatever it is, as a lessee, sometimes he may be taking the premises on a lease, or sometimes he may be using it on a mortgage or on a license with the possession, with his own possession. He is entitled to a deductions of repair charges under this section with respect to the current repairs to the premises. Whatever be the form, it need not be an owner, but if it is a tenant, probably you would have to make it in writing that he is going to undertake the charges of repair on his own. But otherwise, in any other forms also, if he is going to take that and use the building or take the possession of the building, they can be treated, the repair expenses can be treated as deductible expenses under the particular section. And the other expenses in relation to, in addition to these two, that is the rent, rates and taxes, and then repairs to the building. All these expenses by way of land revenue, local rates, municipal taxes, insurance in respect of the premium paid for the purpose of the business. When the premises is going to be used for the business and we are going to pay the insurance premium for it, cess, whatever cess you are going to pay, taxes, rates, GST, whatever it is, whatever kind of taxes levied by a foreign government or Indian government, also going to be allowed as deductions. The premises may be used partly for the business and partly for other purposes. In that case, only the proportional part of the expenses attributable to that part of the business and business premises is going to be used for the purpose of deduction. For the purpose of business will be allowed as deduction. Say for example, 50% is going to be used as for the business and another 50% is going to use it for its own. In that case, only 50% of the charges are going to be deducted or allowable deductions as per the law. Then repairs and insurance of machinery, the plant, the furnitures, they are all going to be dealt under section 31 of the Act. Again, 31 allows the deductions in respect of expenses on current repairs and insurance of machinery, plant, furniture, in computing the income from business or profession. The usage of the asset, mostly the asset must be used for the purpose of the business. Even if an asset is used for part, for a part of the previous year, the assessee is entitled to the reduction of the full amount of expenses on repair and insurance charges and not merely a proportional amount of it. So even if the assets are used proportionately for a proportional period of time in the previous year, then probably the expenses can be claimed in full. That's the unique. The repairs are going to be it is going to exclude the replacement or reconstruction. So the term repair will include the renewal or renovation of an asset, but not its replacement or reconstruction. So when you go some kind of a renovation or kind of a renovation or renewal, that is allowed. But if it is going to be a replacement of the asset or if it is going to be a reconstruction of the asset, it is not going to be allowed as deductions. As far as insurance premiums are concerned, the deductions are allowed or allowable in respect of the premium paid for the insuring the machinery, plant, furniture subject to the following conditions. What are all the conditions that is going to be there? The insurance must be related to the assets of the business. The assets must be used for the purpose of business or profession alone. The premium should have been actually paid or payable under the mercantile system of accounting. Maybe you'll have to pay it or actually you should be paying it, and premium may even take the form of contribution to a trade association. So whoever you are going to pay the premium, that's going to be taken into account, and which is going to undertake to indemnify any company or any trade association. You can pay the premium, but then there should be an undertaking to indemnify and insure its members against loss. Such premium or contribution would be deductible as an allowable expenditure under section 35. And it does not matter if the payment of the claim will ensure to the benefit of someone or the other than the owner. But then, it's a third party claim. That's what they mean. Okay, the accident might happen and the benefit may be given to the third party. So in that case, even the benefit is going to go to the other person, someone other than the owner. Probably the insurance policy premium amount can be claimed as a full deduction. Current repairs and capital nature are not going to be allowed. So whatever renovation, renewal are allowed, so then you are not going to go for reconstruction of any of the assets. So capital nature expenditures are not going to be allowed as deduction. And as far as depreciation is concerned, depreciation it's mandatorily allowable deduction, and there are certain conditions for it. Again, the asset must be used for the purpose of business or the profession, and the asset should be owned by the business or at least the assessee. And depreciation shall be allowed on return on value of a block of assets at the prescribed rates, except in cases of asset power generation unit, and with respect that the depreciation has to be calculated as a percentage of the actual cost. But other than that, you will have to charge your depreciation based on the rates prescribed on the block. As per section 211, the block of assets means that group of assets falling within a class of assets. It may comprise intangible assets also, being a building, tangible assets being the building, machinery, plant, furniture, and intangible assets being know-how, patent, copyright, trademarks, license, franchisee fees, franchisees agreement, and any other type of business or commercial rights of similar nature are going to be treated as one block. So generally, the block will be something like this. If you charge the depreciation, all the assets have to be divided into 4 major categories. Say for example, if you take up the building part, any tangible assets is going to be treated into 4 blocks. Suppose if you are going to take a building, block 1 consists of buildings which are used mainly for residential purposes except hotels and boarding houses and something like that. So in that case, it is going to be for 5%. Block 2, buildings which are not used mainly for residential purposes and not covered by the block 1 and above, can be treated below whatever it is set. So that there you are going to charge 10% depreciation. According to block 3, buildings acquired or after 1st September 2002 for installing machinery and plant forming part of the water supply projects or water treatment system, and which is put out for the use of for the purposes of business or provided infrastructure facilities and things like that, you can claim 40% of depreciation. And for block 4, purely temporary erections such as wooden structures and things like that, Here also you can claim 40% of the actual cost as business use.